go ahead and get this kicked off. First of all, I'd like to welcome everybody here. It's a beautiful sunny night in Texas, and my neighbor is mowing his lawn, so I'm hoping you're not going to be hearing that in the background. So tonight we're going to be diving into the amazing market of San Antonio, Texas. As you can see, we'll be discussing the many ways this market is affordable, growing, and cash flowing. This is a topic and a market I'm very passionate about. So I'm looking forward to tonight. Real quick before we dive in, one quick housekeeping item. We aren't going to be taking any live questions this evening just because of the amount of content we're going to be zipping through. So feel free to still submit your questions, and Kian and I will be following up with you after the event to answer those individually. I just wanted to make sure you knew we weren't not acknowledging those. So with that, we'll dive in. So for a lot of you guys, I do recognize a lot of the names here on the webinar this evening. Why is this not? There we go. But for some of the names I don't recognize, I'd like to introduce myself. My name is Rachel, and I'm a realtor and advisor here on the team at Marshall Reddick. I grew up just outside of Seattle in Washington and then moved to California for college. And then last summer, my husband and I and our two sons packed up and made the move out to Texas. So I'm officially a Texan now. I have my bachelor's degree from Vanguard University, and I am also a licensed realtor in both Texas and California. I'm a huge believer in Marshall Reddick and our many amazing services. I have been a client for many years, actually, before I decided to join the team here as well. So I absolutely love what I do every day and working with our incredible clients. All right, as far as our services, Marshall Reddick is really a one-stop shop for all real estate investment needs. We are a real estate brokerage, so obviously we help our clients buy and sell real estate that is all residential real estate. And some of those clients are shopping either for a primary residence, some of them are shopping for vacation rentals, while others come to us for a one-stop shop investment property services. That's actually how I began my Marshall Reddick journey, is by purchasing investment property, which a lot of you on the call tonight own as well. We are also a private money lender. We help our clients by providing private money loans to a variety of programs. We're privileged to have our preferred conventional lender on the call with us tonight. He'll be sharing a little bit later. But for clients who are looking to secure private money, that's something we can help with as well. On the flip side of those loans, we have investors actually funding each of those loans. We also have the Marshall Reddick Fund, which is available if people are accredited as an option. And that's an awesome passive income option for people who might want to go the route of private lending. We also have in-house property management services in all of our all of our primary markets. So if you're investing in real estate long distance, which most of our investors are, the vast majority, your property manager can really make or break your success. And I can absolutely speak to the incredible services that our Marshall Reddick property management team is, as I'm a client. Kian and I like to joke about this all the time. We don't get employee discounts as clients as far as property management services go. So I really do believe what I tell my clients about every day. So as you can see, our team here at Marshall Reddick, we really do believe in the services we offer. I'm a client in all these areas, and I can speak from experience how much it's done for me as an investor, definitely. Okay, so our markets. We have our brokerage services in 16 major metropolitan markets, but of those, I would say 95% of my clients are purchasing within our primary markets, which are California, Central Texas, Southwest Florida, Tennessee, and Kentucky. As far as market criteria goes, every day clients are asking me, how does Marshall Reddick choose, what are the items we use to decide an ideal client to invest in? That's an excellent question. So these are kind of the areas we focus on most. We want a really strong job market, not dependent on just one or two industries, but diverse, strong job market, low vacancy rates. We want economic diversity. We want housing affordability, where the rents are still profitable, housing isn't too expensive. Is it landlord friendly? That, in my opinion, is the most important, well, either that and property management, most important factors on this page. Marshall Reddick is a huge believer of guiding our investors to put their money in landlord-friendly states, especially given the events of the last couple of years. It is imperative to make sure that the laws are written in your favor as owners. So if the state is landlord-friendly, that is a very important factor to consider. Strong education options, that is also something that is important to have a healthy, thriving market. And like we said earlier, reliable property management. That can make or break your success with investment properties. So definitely these are the things that we recommend and where to choose to invest. Alrighty, so now that we've covered all that, it's my pleasure to introduce you to the host this evening, my partner, Kian Oros. Kian is an incredible and very accomplished agent who I work with all the time. He is not only a great realtor, but he's also a really great friend. You can see this photo was at Wurstfest last fall. It's a popular German festival in New Braunfels in Northeast San Antonio. Super fun. Kian's also a lifelong resident in Greater San Antonio, and he's lived all over the region. Brings a wealth of information and experience from that. And in addition to being a rock star with his clients, he also sits on multiple boards and is a top performing realtor. So I know you're going to love everything he has to share tonight. And with that, Kian, I'll turn it over to you.
Awesome. Thank you, Rachel. And thank you guys for coming on today and letting me speak about our market. I, like Rachel said, have lived here my whole life. So I love Texas. I'd never be anywhere else. Born in San Antonio, lived most of my life in New Braunfels. That was the picture that we took in Wurstfest. That is a big German festival that we have in New Braunfels every year in November. It's a great time to come down if you guys are ever thinking of visiting. One of the few times that weather is really nice. My favorite months are October and November, so I highly recommend. I'm a licensed Texas realtor. I have been for about 5 years now. Started real estate in 2017. I started with Marshall Reddick around 2019, leasing a lot of the properties that we had here when we first started our office. That really grew a lot of my knowledge into the leasing market and what really made great essential investments here. We really encompass all of Central Texas, which we'll get into more on some later slides, but that really is all of San Antonio Metro and Austin Metro and really everything in between. So that's where a lot of my stomping ground is and how I grew experience and knowledge for investment was through leasing. 49 properties that we've already sold and contracted this year. We're only in barely in Q2, so we definitely are still very busy. It's a great market, and we've had a lot of repeat clients through the years. Of course, with the heavy appreciation, a lot of people are growing really great portfolios and investments with us. That's very exciting. This is our team, so we're definitely growing here. We just got a new Braunfels office. We have 2 offices that we're currently under construction right now. We also have an office in Austin. It's close to around 30 staff. We're growing new people every week, so it's always hard to pinpoint an exact number. We have close to about 15 agents right now and about 15 to 16 property management staff. So again, that number is always changing month to month, but that's where we're about right now. But it's good to know that you have a growing team. Like Rachel said, it's so important to have a really professional team that can grow with your portfolio and is making those changes. Mom and pops are well known for not always taking the best care of properties or being able to grow if you have big plans on one day having 5, 10, 15 units. So as you can see here, we definitely are a big team. This is our Zillow page, so we definitely pride ourselves with the customer experience. Buying real estate is a very stressful thing. That's part of the reason why we take the burden and try to alleviate that for all of our clients. So go check out our website, our reviews, our experience. You can see all the past sales we've had. We're not just all talk. We have basis for a lot of the work that we've done through the years. So Zillow is one of those tools, but we have presence on Google, Yelp, and a lot of other platforms as well. Everything under one roof, like Rachel said. So it's good to know that you don't have to, in the real estate world, deal with 4 to 5 different companies for different avenues of marketing your rental, auditing tenants, actually doing the maintenance orders, buying the property. We have it all under one roof. And even for select trades like insurance and mortgage, we still have direct people within our wheelhouse that we use on a regular basis. We'll actually be introducing you guys to one here shortly. This is our fee structure for property management, so we're very competitive. A lot of the average fees for property management in Texas is going to be about 10%. We're at 8% for a single family home, for a duplex to a fourplex, 7% for a 5 to 15 unit, 6% and for upwards of 16 to 29, 5% and 30 and up for. We have very small fees. A lot of other property managements really tack on a lot and deceive you in that way. So lease renewal fee is only $150. We split late fees. The good thing is we rarely collect late fees because we rarely get late tenants. We're very strict on our leasing criteria, and that definitely yields good results there. Our leasing fee is 50% of 1 month's rent, which is good. A lot of PM locally is a full month's rent. So that's a few of our fee structures, but no setup fee, maintenance coordination fee, eviction fee, which is really great. I mean, evictions are already hard. And again, very, very rare instance that we have that here. We actually have the lowest default rate of all the Marshall-Reddick markets here in San Antonio, which we'll get into a little bit, the reasoning behind that. But it's good to know that you don't have to pay an extra fee to your property manager after you're already going through a hard time as is evicting a tenant. So those are a few of our fee structures. This is the main wheelhouse of Greater San Antonio and the units that we have throughout. So you can see the cluster really fixate on a lot of East San Antonio, New Braunfels. We're growing a presence in Seguin and the west side. Not a lot of the southern region, not a lot of central, and we'll get to some more area specifics with some examples later, but we do have this available on our website. And, of course, if you ever want to kind of see it through a real consult, me and Rachel always are open to speak with clients and see where, based on your goals, where maybe you fit best. Likely wherever it is, we already have a presence of a few properties we manage there. And then I'll pass it off to Rachel to introduce our next guest.
Yeah, thanks, Ian. All right, you guys, it is my pleasure to introduce you to our preferred lender at Triton Group Legacy Mutual Mortgage, Mario Galdos. He likes to go by the bald guy with the bow tie. I always giggle whenever I say that. He's just an awesome leader, and Mario is not only licensed to provide conventional lending in Texas, but he also provides lending in all of our other preferred markets as well. So we have clients that have started with building a portfolio in Texas and then worked with him in alternate states as well, or vice versa. So that's kind of a nice, aspect to these preferred lenders is if you ever pivoted your plans, we can take care of you no matter which direction you go. So yeah, Mario's an amazing partner. We love working with him. He likes to pop in the office and bring us bagels and treats, and that's always wonderful. But with that, I will turn it over to Mario.
Thank you so much, Rachel and Kian. Really an honor to be in the presence of greatness. It really, it's a huge honor to be a part of the Marshall-Reddick family and really have embraced all the things culture-wise and everything else that Marshall-Reddick has to offer. So. Again, that was a great introduction, but I am Mario Galdos. I go by the bald guy with the bow tie. I run a team by the name of the Triton Group at Leasing Agents, based out of San Antonio, Texas. I have an office in a suburb named Schertz, Texas. Been in the industry since the January of 2005, so that puts me at a little over 17 years. And of course, we specialize in doing all primary residence, secondary residence, and investment property loans, which of course mainly could include the conventional loan. We do offer in-house underwriting, processing, and closing, which means, again, we are a local lender. So one of the huge advantages, especially in a market like the one that we're in right now, is having local underwriting, local appraisal panels. Again, just having everything be a local option to ensure that we set everybody up for success and get everybody closed on time, which is imperative in this market. So again, we do lend in several states as shown here on the screen, and we're honored to be able to service you. Another thing that, let me move forward here. Here we go. So again, buying investment property or any property really is as easy as our 4-step process, as you can see here. Just to quickly navigate through that, I have an excellent team that's going to help throughout the entire process. But of course, we have to start with, like I always say, with starting. So start with starting, which means getting you pre-approved. Again, in this market, it's imperative that we get everybody pre-approved because sellers don't want buyers that are not pre-approved. In fact, sometimes they'll actually turn away showings and offers if a buyer's not pre-approved. So it's important that we do that. Of course, have complete pre-approvals, which include having income, assets, credit, employment, really a pre-underwriting, which is what we do as a full-service local lender here in our area. And so another thing that as we go through the process, of course, we're going to go through a disclosure phase. We like keeping everything electronic. We do things through DocuSign, again, just to keep the whole thing simple. And then by the time we get to processing, we've done multiple reviews to just keep that process, once again, extremely simple by the time we get it into underwriting. And so as we get loan approval from our underwriters who review everything based on program guidelines, if anything else is needed, we'll request it. And then, of course, we get our clear for closing and get you closed. My team is instrumental in this entire part and is very communicative. In fact, we send out weekly status updates on Tuesdays via email. Plus, you'll get a personal phone call from my team to confirm that you're getting that update. Proactively ask if you have any questions about the update, and then always survey our buyers to make sure that we're doing the best that we possibly can. So they'll ask how we're doing on a scale of 1 to 10, with 10 being the highest. So if I ever drop below a 9 or we drop below a 9, I will personally call you to see how we can improve that experience. So as we move forward, here, what we're seeing as well is that, for our for investment buyers, we are going to be for single family residents at an LTV, or basically loan to value, of 80%, meaning you would have to put 20% down. Now, as long as underwriting accepts the loan, we can go down to a 620. I will tell you that 620 will have some challenges with some interest rates and, in fact, getting that pre-underwriting approval, but it is possible. Now, for multifamily, anywhere from 2 to 4 units, you will see that requirement increases to 25% down. Same credit score. Again, I'm not advising that anybody has a 620 when trying to get an investment property loan, but it is possible. So again, 25% down for multifamily, 20% down for single family. And some folks are, in the market right now, of course, with a slightly higher rate environment, but still a great investment opportunity environment. We're really encouraging everybody to lock in the pricing. So while we know that in the future rates will go back down, we can always refinance, and we will proactively be the lending team that will reach out to you to refinance. However, one of the things that's available as an option now is to take cash out of your existing investment and reinvest it into another property in the market. And so as you can see here, it shows that a single family residence will allow you to draw up to 75% loan to value. As long as you retain 25% equity, then we can definitely pull cash out for your single family residence. And then once again, for a 2 to 4 unit residence, up to 70%. So multifamily would go up to 70%. So moving forward from there, we do offer service member discounts for all doctors, nurses, teachers, police officers, firefighters, active duty and military veterans. Again, this is something that we're really honored, especially being in quote unquote military city USA, which is San Antonio. It is a great option for our families that, of course, are looking at getting some, as I like to call it, hero discounts. So I created this Help a Hero program, which basically works like this. We offer a 1/4% credit, which is multiplied times the loan amount and then given towards closing costs. So in my example here, I'm showing you this 20.25% credit on a $400,000 loan amount. So taking $400,000 as the loan multiplied times 0.25%, we are giving you $1,000 credit towards your closing costs given at closing, for our heroes, as a way of saying thank you for your service. And so one of the things that I really wanted to convey here in our message today is that I think it's amazing for anybody to invest time into themselves to learn more in any sessions, right? So you all are taking time out of your day to be with us today. And so I am going to honor for anybody in attendance on this meeting today to give you this credit. So just as a way of saying thank you for investing in yourself to learn more about the not only Marshall Reddick, but also working with the Triton group. So we're excited to be able to offer you that just for attending. All you have to do is mention, hey, I was part of the webinar and I want to take advantage of the credit, and we will apply that for you. And so in summary here, again, we are the local resource here. Please jot down our contact information. We're honored to be a part of the team and want to make sure that we're taking excellent care of you. We have a great team that's always here for you. So even if I'm not personally available, somebody on my team is able to help. And I'm always very good about making all my callbacks and follow-ups on the same day. So if you need anything at all, you just need to give us a call, send us an email, and we'd be honored to help you. Thank you so much, Keen and Rachel. I really appreciate the opportunity to visit with our class members today.
Awesome. Thank you so much, Mario, and thank you for providing that credit. I know that definitely helps at the closing table and is much appreciated.
Yes.
Just to get into some of the next slides about our market, some details, of course, a lot of people ask why Texas. We're in a lot of other markets, and what kind of distinguishes Texas from the Tennessees, the Floridas, the Kentuckys, if you will. Texas is the second highest population state, right behind where a lot of you guys are in the Golden State of California, which is the #1. Texas is landlord friendly. It's very easy to evict here. Tenants do not have a right to renewal. There are there's no rent control. We have one of the lowest market default rates through COVID in Marshall Reddick when we compare market to market. Central Texas in particular is a pretty minimal disaster zone. So even within Texas, if we're looking at other cities, Texas is in the middle. So, Houston's often to the Gulf, and then Dallas is up north, closer to Tornado Alley. Of course, other states do have more disasters, but Central Texas, aside from some very hot heat, we do not luckily have a lot of disasters, and we never sell in flood zones. So that's not really something that you luckily have to worry about here, which definitely does make insurance more affordable. Central Texas has the most diversified workforce. So as Mario mentioned, we are the military city. We have mainly military, government, and medical in San Antonio. So we have the biggest medical center in San Antonio of any Texas city. We also have the biggest military presence of any city in the country. As you all know, Austin has become a big tech capital. Also home to a lot of corporations as well, have broken ground in Austin and greater Austin. So that's always very exciting to have those kind of in the back door. There's a lot of industrial work closer towards Seguin in that south region. So we have Amazon plants, we have Tyson plants, oil field work. So we have a very diversified workforce of white collar, blue collar, everything in between. And that really creates a very stable growth for the market. Job Corps is a very huge proponent of what drives a real estate market, because frankly, it's really what how people can afford to live. As you can see here, you can look at some of the population metrics from San Antonio Metro and Austin Metro. and how things have grown over the last several years. It's crazy how much it has boomed here. New Braunfels in particular, I remember because I grew up there in 2010, it was about 30,000 people, and you could easily go to the grocery store and see the same people like every time that you're there. And now it's close to about 100,000 people in New Braunfels. I think it's somewhere in the 90s, but it's going to hit that mark pretty soon. That's almost triple the population in just a decade period, which is absolutely insane, and part of the reason why our rentals are going so quickly right now, and we can get really high lease amounts. So many people moving here, not enough housing, and it's a great opportunity. So this is a bird's eye view of all of Texas. As you can see, Central Texas is right here. So we're almost right in the heart of Texas. This right here encompasses what we call the Texas Triangle. So at least about 70 to 80% of the population of Texas lives within this triangle. These are the 4 big cities, Austin being our capital. So it kind of gives you an overview of where we're at. Houston is where Rachel is from. So another great city. It's the energy capital, really of the world, but definitely of Texas. So another interesting fact. So these are the average price points amongst those 4 major cities. So Austin has completely gone through the roof. It's almost close to about 600 average for a single family home, which is insane. About prior to COVID, Austin ran about right where San Antonio, New Braunfels are right now. So 322 was about kind of the average price home of in Austin when we were probably looking at like 2018, maybe some of 2019 as well. So that kind of shows you the trajectory of San Antonio to Austin. Kind of the rule, if we look at the stats and how those 2 markets have moved together, San Antonio usually follows Austin market by about 3 to 5 years. I would say New Braunfels being closer kind of moves a little bit sooner, so maybe the 3-year mark, or West San Antonio maybe closer to 5 years. So you have a close trajectory where a lot of the values are going because Austin is in the back door. You can see too, Dallas is pretty high up there. It's almost close to 400. Houston is pretty close to San Antonio, so at about 324. Houston does have the highest property taxes though, also usually the highest insurance, being closer to the waters there. So it does make the cash flow a little bit harder than our area, but San Antonio does stay the most affordable of the bunch and the most stable, of course. These are the population metrics. So Dallas is the biggest metropolitan, and that is Dallas and Fort Worth together. Those areas have kind of grown over time. That's kind of what San Antonio and Austin are doing. So those metros are growing rapidly. Those are kind of the winners of COVID, if you will, when we see where people moved the most. So Houston Metro, Dallas Metro, really close to 7 million population point, where San Antonio and Austin are still around that 5 million. So I think there's a lot more room for growth here over time, and people are starting to figure that out. And of course, moving here in just droves, it's crazy. This is kind of just to overview back to my point that San Antonio has the biggest medical center in the state. Not a lot of people believe that, but it is true. So Austin versus San Antonio, again, San Antonio has the lowest cost index. It's very affordable. It keeps it more on a steady pace of appreciation, as where Austin has been a little bit crazier through the growth. Of course, it being tech-based, and I'm sure maybe a lot of you know if you're from the Bay Area, the prices can travel a little bit more just based off of the pay that a lot of people get. I think last time I checked, and this is not something that we have on here, average pay of someone in Austin Metro is moving close to about 90,000 to almost 100,000, so 6 figures. So that's almost the norm there, where in San Antonio it's still kind of with the national average of 60,000, which there's pros and cons to that. Austin easily has a type of resident that can more easily buy a home than in San Antonio. You have a closer balance of a renter's class in San Antonio, which I would say provides a better vacancy period. And you have a little bit more options and slowly growing your real estate there. And again, them being in Central Texas, I wouldn't call them disaster proof, maybe resistant. It's a little bit harder. If a flood came here, it'd be pretty concerning because we're pretty far away from everything. But A lot of people ask what they have to worry about, if anything, in Central Texas, and not much, just mosquitoes and heat. Cash flow versus appreciation. So this is another thing that we look at in people who are maybe interested in Austin and also San Antonio. So this kind of shows you the in-between. I call I-35, which is this main thoroughfare that goes all the way up to Dallas. I kind of call it the main artery of Texas. So it really loops together from the border through San Antonio, through New Braunfels, all the way up to Austin and Dallas, eventually Oklahoma. So there's a lot of growth happening along this corridor. So we've sold many duplexes in the past, and we'll kind of show you some examples later here, but this kind of goes to show you several duplex products that we sold in 2019, how they were very close in proximity and where those traveled through the growth of these areas. So a lot of people don't maybe always see the big picture of where you're investing because they're so stuck up on the month-to-month cash flow, which is super important, but you're not going to become wealthy storing away $50 to $100 a month. It's great, and maybe it covers a few expenses in your personal life, but really where people grow a lot of wealth, especially how they did in California, say in the 80s, 90s, early 2000s, is investing in areas that were going to boom. So again, very similar duplex projects here that were bought in either place. So you can see in New Braunfels, $359 for this duplex. In Buda, it was a little bit more. In Seguin, it was the cheapest, and they've all gone up. So to 2022, resuming to where we are now, 3 years later, all of them have made great profit margins. All of them have made at least about $100,000 or more in just 3 years, less than 3 years, which is amazing. But you can see how Buda won the most. It's about at 680 today, which is insane, but it being closer to Austin, that's where a lot of the growth happened. New Braunfels was in second place. Of course, I vouch for it heavily. It's affordable, it's growing rapidly, lots of fun things to do. You saw me and Rachel having fun. That went to 505, and then we have Seguin at 475. And it's not to say all three of them aren't great investments. I mean, if we compare outwardly in other states to where investments went, I would say all three of these are winners. But when you're nitpicking spots and where you want to land over time, this is just a good kind of trick that you can look in your mind to where values can go for very similar things. So this is another thing that we look at. I know right now rates are very hard. A lot of Texas, for especially A class, is going to be in the negatives right now, which that's why I bring up cash flow and what a lot of people get stuck on. And right now, so this is an example of spending, say year one, you're looking to make negative 100 to 200 each month. That may put you at negative 2,400 for that first year. But the value jumps up about $40,000. So not a lot of people think in the perspective of what you made in that year on the value. So that's where I'm saying a lot of the wealth really grows over time. Now in the next year, you get to raise the rents. The average here depends on, of course, the area. It's going to be about $100 to $200. So that negative of $200 or so starts to level out close to negative 500 or maybe close to break even. And now that next year, it jumps up to $60,000. These are very close to pretty much the last 3 years of these examples I'm giving. And then that year three, when we jump up the rents, you're now in the positives. But now, you know, maybe that year it's another 60,000. So you've gained almost 150,000 in value, and now you're to good cash flow. In the future, rates are going to go back down. So there is always the possibility to refinance. But I guarantee you the race will be back on once the rates start to go down. So take the opportunity while even maybe in the next year, we're not seeing record appreciation at 20%. Maybe we're seeing at 8 or 10, which is still good. You know, you want your money growing. As we all know, the US dollar is a little crippled, and it's not, you know, growing your value of anything. This is a better approach to take. So that this is just something to keep in mind. A lot of people come to me maybe initially really strong on the cash flow front and end up seeing the value and appreciation. almost 9 times out of 10, when I assisted some client that really wanted to push for cash flow and they got what they wanted, and we compare it to the appreciation client, the appreciation client won. And how you're going to actually break apart and build portfolios and doors in the future is having that value go up. This one in Buda, now that it's gone all the way up to 680, potentially, I put some figures here for 2025, you can pull out so much money from that duplex and you can buy another one. But for the Seguin one, maybe you couldn't take out as much. So that's something important to think in mind. When originally in 2019, this was cheaper, the cash flow was better. And this is not a point for me to, dump on Seguin whatsoever. But when we're looking at other areas, because people even look outside of Central Texas to El Paso, to Laredo, to areas that aren't really fruitful for investment, thinking these are huge, heavy cash flow markets and they're great. And they don't realize the value is just going to get them out of the race with a lot of these bigger metropolitans. Because the fact of the matter is that the cash flow markets are always going to be there. The Midwest, that is great for cash flow because you can just buy up properties like nothing, rent them out, and it's very balanced. Tenant quality is not always good. And then your value is probably pretty stagnant over 5 to 10 years. In these areas like Austin, totally lapsed you. You can't even buy there now. So I think there's a window of opportunity because I don't think it will be able to work in San Antonio for a lot of entry-level investors forever. So I think it's good to get in now to build why you can, because maybe in the future the opportunity is not always there. A-class versus B, C, and D. So I'm a big proponent of A-class properties. Variable expenses are always higher on lower class properties, and that really eats into cash flow too. So another deceiving thing is, I see so much misinformation on whatever it is, Facebook, TikTok, these blogs that people listen to about buying a crap property and putting money into it easily and just letting the cash flow right out. There's so many things that can pop up, and we call it variable because it varies. It varies how much it can be because nobody can predict. Maybe the foundation was settled then, but it's also a 30-year-old property. Maybe the piping was good, shifts a little bit, now it's done for. So we also are in a time where, material costs are higher. There's not as many people in trades as there is usually, even still to this day. So cost to remodel is very high. It's not 2008 anymore. So the rules of the market and the economy have changed. A lot of people try to push themselves into the 1% rule, get a property that is completely bad, not in a good area, try to gentrify it and pretty much make lipstick on a pig. That's not really the rule of investing, at least what we like to do at Marshall Reddick. I think there was a time and a place, especially in the last 10 years, where maybe that worked better. More resources, cheaper materials, housing was at a different price point. Right now, it's not working as fruitful. There's not one size fits all for every investment strategy, but this is usually for the outside investor what will give you a little bit more peace of mind. Because if you're trying to build up and leverage, you don't want the properties that are weighing you down. Even if you hire a property manager, they still have to get your approval for repairs. They still have to ask you for money because your property manager is not going to pay for it, unfortunately, for you. So you're still going to be bothered. Unfortunately, those things aren't just covered with a management fee. If there's lots of maintenance on it, it's going to come with being bugged a lot. And if you're wanting to build passively, you want it to be passive as possible. And that's going to come with an A-class property in great areas that are desirable and that are newer. So we really try to shoot for 2,000 and up for a lot of areas, and that does really well. As far as the B, C, and D class properties, I don't want to continue on this forever, but the rents usually do not increase as high, because there's not as much of a demand to live there. And then again, the constant renovations, the maintenance, and they're not going to usually appreciate as well. So you're not going to see the value travel as far, just kind of like in the recent spread where we looked at the different areas across Central Texas, and kind of speaking more to that example. As far as the stats, we're right now at about medium 1800 for and that goes medium across all bars, A, B, C, D class properties. So really for a lot of A class, we're almost to about 2000 in San Antonio. So rents have gone up a lot. Over the past 3 years, rents for a 3-bedroom increased almost about 21%. So it's been massive increases year to year. Like I said, it's usually about 100 to 200 a year. This is that steady chart that I was talking about. So if you look a lot of expensive areas, you start to zigzag a little bit where you may have areas of stagnation, then they're gonna go up very high. This is a little bit more of a safe bet area. Even through the housing crisis of 2008, you see pretty much break even. The worst of it was 2009 with about negative 2% decline. So pretty minimal for the damage that was done in a lot of our country for a very hard time. But overall, average throughout the rest of our history has mainly been on an average of 5 to 6%. In more recent years, we've traveled to about the teens, or about 14. I think 2022 is set to at least probably match that, if not a little bit higher. So a lot of people are always afraid about a recession and what that would bring. And we don't have a glass ball, if you will, crystal ball. But you can look at the stats and you can make the best assessment of where it is best to plant your seeds in any market. So look at this for California, for New York, for Tennessee, for Florida, and really make bets on areas that have done best historically. And you'll be a little bit safer in that. But again, kind of the average thing that we see is the biggest winners in price point. So these areas that have a medium of 800, 900, 1 million are going to see the biggest decline. The higher the climb, the harder to fall. And really, in a lot of San Antonio, we're still really on par with the national average for housing. So that's really a safer bet than going to maybe some of these higher markets like Austin that have traveled to exponential highs of almost 600 average over the last 3 years. There will be a little bit more of a pullback felt in the higher price points, typically because during a time period of recession, not as many people have money to spend. So of course, luxury markets and higher price markets feel it first. So just another thing to keep in your head while you're shopping across different areas in our country. Seguin is a special place. It is a little bit under New Braunfels. I like Seguin in its growth because it's a discounted New Braunfels, close to all the same things. So it's almost the same proximity to Austin, same proximity to San Antonio, and it's on the I-10 stretch to Houston. So over there to Rachel, it's about a 3-hour drive to, say, Rachel from Seguin. It's about 15 minutes to New Braunfels, about 45 minutes to an hour to Austin, and about 30 minutes to San Antonio. So you have a great proximity in Seguin. And Seguin is significantly cheaper than New Braunfels. So I see it as now a good opportunity. Now, when we were looking 3-4 years ago at my last example on how other areas were kind of closer in price point, New Braunfels, Seguin, even areas of Austin, were a little bit, the gap wasn't as far. Now, as Austin's reach is starting to get further and further out with the Tesla plant, with Buda growing, Seguin being a little bit close to that does help. And we just bring it up, because we talk a lot about San Antonio, New Braunfels. Not a lot of people know Seguin on the map, but it is another good option, compounded with a lot of the things on I-35. So New Braunfels, Schertz, which is where Mario's from. I own land in Schertz. I love that area too. We'll get to an example there in a bit. So all good areas here that, I love this kind of cluster of land because it's right in between the San Antonio and Austin stretch, and that's going to boom as those areas kind of grow together. Cost of living in Seguin is probably the lowest in Central Texas and in Texas in general. So you can see it's right there with San Antonio at about 90, high 80s. So it's very affordable in Seguin overall. Here's a few stats. Of course, we'll share more afterwards. I just want to make sure we get through all the slides here. We have these market packets on our website, so you're free to go there and kind of see more intimate data about all the areas that we're talking about. So these are some hand-picked examples and options that we have right now or on wait list. So let's talk through some good properties that I picked that I really like, I would invest in myself. That, you know, if you're in the market or you're thinking, you can kind of wrap your head around these. And if you have any questions, do feel free to put them in the chat. We're probably not going to get to answer them today, but we will get back to you tomorrow and through the end of the week. So always happy to help you in that regard. Sydney Cove, this is a great example that we have of a small development in Schertz. Again, that's where Mario's from. That's where I have land that I'm developing myself. Very good area, great schools. Schertz Cibolo ISD is one of the best in Central Texas. It's mainly single family homes and primary residence, which is gold for investment because there's not enough rentals. That's what that means when I say mainly primary, mainly single family homes, is there's not enough rental properties. So when they are up, they go quick. This mainly is on a wait list right now. So we have about close to, it's going to be about 15 duplexes left in this community. We have currently a wait list. So kind of how that works is, you know, we can talk you through what's in the pipeline. These will be selling from now to the end of the year, closing from anywhere from May to the end of the year as well. It's just a smaller community. They have really great features and they're all in. So our duplexes are great because they're ready to go. You buy them, they have all the appliances, they're rent ready, they're up to code. All we got to do is lease them, especially through the summer months. Y'all are coming to us at a great time because now to August, it's leasing time. So it's already been pretty steady here, but we have periods of time where things lease in a month, or sorry, not a month, a week. So this is a really great opportunity. This is where it is on the map. So it's right in between these main hubs. So it's right in between San Antonio, New Braunfels, and Seguin, right on the I-35 stretch towards, you know, if you're looking, this is the direction of going up to Austin. There's right here, this little gray patch that you see is a military base. This is Air Force base that we have, one of the biggest. We also have a big shopping center called The Forum. This is home to IKEA, Target, Costco, big retailers. It's one of the biggest outdoor shopping centers next to the Domain, which is in Austin, a very popular one. Those are the top two in Texas. So that really good to be close in proximity to that. This is some of the numbers. So this right now is really good. And these are numbers that we have from a while back. So they do have 3.8. But guys, I'm sorry, that's not the interest rate anymore. This is from when we had these last month. Isn't that crazy? Just in about a month and a half's time, we've slipped to about almost 6%. But this was about 550 then for cash flow. I'm going to say roughly in my mind at 5.5%, you're going to be probably at 250. Of course, when you consult with us, we kind of walk through based on your financing where you're going to land. But these still cash flow is the point. You know, a lot of where the pricing is at now in Austin, this similar in Austin where the price would be, you'd be in the negatives. And a lot of our properties, as I mentioned earlier, with rates now are in the negatives. But you have the chance to finance in the future if you have the money to offset the negative as you're building your wealth and the value that's more important. The rents will go up, the interest rates can be adjusted in the future. So that opportunity is there, but once rates start to go on the decline, the race will be back on and you guys will start to hear the craziness of the 20, 30, 40 offers again. And that's not a fun market to be in. Trust me, we've been in it the last 2 or 3 years, so I speak from a little bit of experience. The Jordan Creek duplexes are a great one as well. These are in Seguin. This is a community that's pretty established. We're almost halfway through it right now. We have quite a few of these available at the moment. So if you're more in the immediate, we have some coming this month that will close in September. We did have one fall through on financing that's going to close this month. So if that seems attractive to you to lock up something with Mario for the rate, let us know. Just reach out to us afterwards and we may be able to help you out. Has LVP flooring, granite countertops, stainless steel appliances. This is right underneath New Braunfels, and this is Navarro ISD. So Navarro ISD is actually a better school district than New Braunfels. So it's very good, very prestigious, great schools, and it's only about 15 minutes from South New Braunfels, actually maybe about 10. So you're gonna be in a good area of North Seguin that I consider to be one of the better areas of Seguin for sure. You're also pretty close to Texas Lutheran University, which is a very nice private school in Seguin as well. These are the numbers that we currently have. This one has the adjusted interest rate. So you can see you're at about 420 for cash flow. And you're pretty much break even for total cash flow. This factors in all the variable expenses. So I typically look at monthly income. This is really what you're gonna pay month to month and be left with. After you pay this heap of a bill, these are the things that you're responsible for regardless. These are your tax burdens, your HOA burdens, your property management. This is everything you're gonna have to pay with. You can't avoid these things, unfortunately. These things you kind of can avoid. The nicer the property, the lower the rate, these things will exist. Maintenance, you know, that coincides with, is it a newer property? Is it warrantied out? How good is the tenant quality? You know, this is a newer duplex, great area, great tenants. So it's going to be a lower risk for maintenance. Same with vacancy. So we have the lucky owners that have tenants for 5, 10 years, and we have the unlucky owners sometimes that see a new tenant every year. I could say the nicer the property is, the bigger the appeal, the longer they stay. For an A class, the average is about 3 years. So it's good to know, even at worst case, this is negative $1. So let's consider it break even. And monthly income is 420. So that's really good, even with the crazy interest rate right now. So this is updated stats, guys. So this is the example like I was sharing you earlier. This is the one for the example of the one that would be closing next month. So if you're interested in that, just let us know. And I think that just fell through today. So that's pretty new. If you're a client I'm working with, we'll be sending the information out as well. This is the community plat. You can see kind of how big it is. It's about 50 to 60 duplexes total. There's certain lot premiums in certain areas. It depends, of course, which one you buy. So when you actually get on the wait list and you get one available, we'll kind of show you which ones you can pick from. This is our last community. So this is a single family home for anybody that's looking on the lower end, under 350. These ones are a little bit affordable for a great area. Voss Farms is one of my top picks. And Lennar very rarely allows investors. They very rarely have openings in New Braunfels. And I just got these this morning from Colton. He's our Lennar rep. He is great to work with. They have an elementary school inside the neighborhood. They have 2 swimming pools, splash pad, playground. It's a great community. A lot of them have solar panels that come with the homes as well. This is right in South New Braunfels next to 2 big parks. It's about only 10 minutes from downtown New Braunfels, only about 5 minutes to I-35. It's a steal. It's a really good, this is an example of one that we have at the moment. This one is on the higher price point, but I do like 4 bedrooms more because they are higher to appreciate. In the age of COVID, people like the extra room for the gym, for the man cave, for the home office, whatever it be, those are more popular. So for this one, even at the 5% interest rate, and right now with my buddy Colton at Lennar, he may be able to get a little bit lower. And if you use Mario's credit, you may be able to do a little bit of a buy down with that too. You may even get better cash flow. So this is negative 140, but this is 350 for the purchase price. So that's about the national average for a lot of these. But you're in New Braunfels in great proximity, great appreciation. So try to keep in mind, again, kind of this in Austin right now is about 550 or so. So this definitely has the potential to go up 100 to 200,000 in the next 3 years. Like I said, Austin market, San Antonio market is kind of dictated by where Austin is, give or take 3 years. So that's what's on the table. Of course, this is at 25% down. So if you make the extra stretch to 30%, you're going to be at pretty much break even. So that's not too bad. So that's all of our examples. I'm going to pass it over to Rachel, but thank you so much, guys, for listening to the market today. If you have any questions, do reach out. I'm going to send all those properties I talked about in an email to everybody. And if you have any questions, just hit me back up. I work 24/7, so you can reach me pretty much at any time, give or take if I'm, working with somebody else at the moment. But it was a pleasure as always. And Rachel, I'll let you take over.
Yeah, thank you so much, Ken. He's not kidding. He does work 24/7. I wake up early with the kiddos and I see emails from Ken at like 3 in the morning. I'm like, this guy. Anyway, so yes, that was super helpful. I hope you guys found that as valuable as I did. I mean, we definitely practice what we preach here. Both Ken and I are investors and Mario in this market. It's been extremely a lucrative investment for all of us. So why? These are the things you can expect with a consultation with an advisor. So if you aren't already working with an advisor, I'd be happy to set a complimentary appointment with you. So we sit down, we goal set, take a look at your long-term plans for what you would like to achieve. Then we discuss how, we evaluate the different options. When we discuss your time frame, for some clients it's ASAP, let's lock in, like Mario said, let's take advantage of that credit. Some people are like, I need 6 months to save my 20% down. Whatever that looks like for you, we'll decide on the time frame and get that locked in. Then we set your criteria. A lot of clients are more drawn to single family because of the appreciation. Some might be more drawn to multifamily because of the cash flow. Whatever it is for you specifically, we'll set the criteria up. Where we'll identify the market. Obviously, tonight we were talking about San Antonio and Central Texas. We do have other markets. I'm very biased. This has been my favorite market. I've invested with Marshall Reddick over the last 10 years in 3 different markets, and my San Antonio fourplex by far has been my best investment. So we're all, like I said, we're all big believers in this market. We practice what we preach. As far as who, we'll introduce you to all the key players. If you meet with me, I'll connect you through to Ken for next steps, and he can help you on the specific property search, and connect you to Mario for your financing. Sorry, bear with me, my computer's being grumpy. Yep, and so here's my info one more time. You can see that here, and Ken's gonna send a follow-up email to all of you guys tonight to follow up. Again, if anybody had any questions, we will get back to you guys on that later this week. But thank you guys so much for joining. Thank you, Ken and Mario, and I hope this was helpful, and we definitely look forward to discussing with each of you your investment journey. So I hope everybody has a wonderful evening, and thanks again.
Thank you all so much.